It's Brian Preston, the money guy.
All right, Brian, let's talk about another one that's kind of unique inside of 401k provisions or secrets that you may not know about. Now, we all know when we have a 401k, we often have a list of investment options. And normally, plans have a couple of investment options. There was a study done by Fidelity that found the average plan offers about 15.4 investment options across the fund lineup. Now, some plans are better than others. Some have really low expense ratios of 0.37% or even lower. Some plans have really, really expensive investment options, all the way up to 1.5%. So not all plans are created equal. Well, every now and then, inside of certain 401ks, you may see a very unique option called a self-directed brokerage account, which essentially allows you to open up your investment options to the entire investment universe.
So this sounds like, to me, Bo, this could be a blessing or this could be a curse.
That's right.
So we kind of probably need to break down. I know you had, because we want to talk about the two that we're most familiar with. We had Fidelity. They had a brokerage link.
And this is actually from the Fidelity website. If you're someone who has a Fidelity 401k, you log into Net Benefits, you go see it. This is how you know if you have this. Log in, click on investments, and if you see a brokerage link tab there, that's a huge indicator that you have access to a self-directed brokerage account inside your Fidelity 401k.
So that's Fidelity, but we also know Charles Schwab offers these. They call it a little different. Instead of brokerage link like Fidelity, they have what's called PCRA. What is that?
Personal Choice Retirement Account.
Okay, and you actually have that up on the screen as well. So if anybody has a Charles Schwab 401k, this is probably what your login screen would also look like if you had that as an option. But I wanted to kind of talk about those pros and cons because it is one of those things. I know when we get a brand new client, we always we want to know what options do they have in their 401k. And it's not uncommon, even though you said the typical plan has 15.4 options, It's not uncommon that it will be cash or some stable value. It's going to be basic equities like your large cap holdings, and it's going to be some internationals, and it's going to be some bonds. And that's about all I can think that is assured. Now, is there going to be small companies? Is there going to be mid-sized companies? Is it going to have, access to index funds? Are they going to have international by different versions? Are they going to have real estate? These are all the different things you could think about, but that's the part where it could get confusing or it could be a blessing to you, and we can kind of cover that a little bit more too.
Yeah, it allows you to add asset classes beyond the traditional asset class that are available. Maybe you are that person who has a 7-figure retirement account, and so when you think about your pizza pie, your asset allocation, you're not able to fill in all those different pieces based on the 15 options available inside of your plan. So it does allow you to create a more robust investment strategy. It also may be the determining factor of whether it makes sense to roll in old 401ks into your new 401k, or whether it makes sense to roll in like an IRA rollover into your 401k. That broker or that self-directed option may be the thing that says, you know what, I'm okay doing this because I'm not going to lose any investment access to the universe of investments that I've previously been using.
And then we've already kind of alluded to this, and I love the fact that you just covered the backdoor Roth, because that's a great planning opportunity. Don't leave those abandoned assets. This might allow you to bring it in, not really leave anything on the sidelines, because you get to do full asset allocation. Take advantage of just go beyond the basics of just stocks, bonds, and cash. Well, there are some pitfalls though. You can have too much of a good thing and know yourself well in the fact that if you're a person that has analysis paralysis, meaning that, because there's all kind of research out there, and there's a reason that they only give you 15 options in your 401k, because they've heard, like, if Fidelity gave you access to their hundreds of funds, they've actually found that people like don't know what to do, and they actually make poor decisions, and they actually lead to not even making decisions at all. That is a negative thing. So if you find that you're going to be a person that's got analysis paralysis, or let's talk about, Bo, another thing. What if you get distracted trying to chase the hot dot? There was a headline that came out just this week that we ought to draw attention to. It made headlines everywhere that Fidelity is now going to allow Bitcoin in their 401ks.
Yeah, and look, does that make sense for your situation? Does it not make sense for your situation? That's probably an entirely different show for us to do. But having that access inside of a self-directed option may allow you to go further out on the risk spectrum than you should. Perhaps it's Bitcoin that you're thinking about, or maybe you want to invest everything in individual stock, or maybe you want to start doing some sort of penny stock strategy or some sort of day trading. Just because you have access to those types of things doesn't mean they're going to be the solution, the strategy that allows you to actually build towards financial independence.
Well, the only word of caution, because I'm not going to throw complete shade at this, even though I do think it's interesting. Now, a lot of people, because Berkshire Hathaway was having their annual shareholder meeting this week, and Warren Buffett made huge headlines because he said that he wouldn't take all the Bitcoin in the world for $25 or something like that. I mean, he just... people howling in the aisles about it, because a lot of people who were throwing shade at Warren said, well, of course, he's over 90. He doesn't understand it. But it is one of those things where what I worry about is, and take Bitcoin off the table, we know that 401ks are the assets that people cross over into seven-figure status. And I think the reason that works so well is because, think about it, you have a incentivized version that the government gives you tax breaks on. You have you put money in, your employer puts money in. It's rewarding consistent behavior, because every time you get paid, you're putting money in. And this is the account that 29 years in the future from when you start this process that crosses into that millionaire status when you're in your late 40s. If all of a sudden we broke down those good behaviors as an automated wealth building process with the distractions of chasing the hot dot, whether it's individual stocks or whether it's Bitcoin, you might find that 29 years in the future doesn't lead to the same result as a consistent automated wealth building process.
And here's the truth of the matter. We mentioned some of our favorites. We mentioned Fidelity's brokerage link. We mentioned Charles Schwab's personal choice retirement account. Not all self-directed accounts are great. Some of them have a lot of fees for trading, or they're at smaller custodians that don't have robust investment options. Some plans may give you more freedom and more options than others. So just know, just because you have access to a self-directed choice doesn't mean it's one that you should take advantage of. You need to do the research yourself to see if this is actually a viable tool inside your tool belt. It's not uncommon. We may even have clients that have a brokerage link option or that have a PCRA option, but we opt not to use it because it doesn't make sense for their unique financial plan. So you need to answer the question, does this better help me achieve my financial goals, or is it more of a distraction?